So I thought I'll talk about the correlation of US markets with Indian markets because every time the US markets falls or starts sliding, the Dow or the Nasdaq starts going down, my inbox starts getting flooded and a lot of people ask me, Rajat, is Indian markets going to fall too if US markets keep falling at this rate? Let's break it down simply and without any jargon try to understand, because the answer is yes and no. If you look at the traditional historic data, the US markets, every time they have fallen in past, Indian markets have trailed them and fallen them too. US markets are driven not just by American liquidity, but in a large way by global liquidity, just like Indian markets. Markets are interrelated to a certain extent. So when US investors turn risk averse, say because interest rates are high, inflation or poor earnings, money flows out of risky assets globally, including emerging markets like India. So, to that extent, they will withdraw. And, that's why they say when Wall Street sneezes, the world catches cold. You'll see FIs will pull out money. Having said that, the percentage in which FIIs are holding Indian stocks right now is really at an all-time low, whether it's you look at the Nifty 50 companies or Nifty 500, it's really at an all-time low. So, if you look at the historical context, in 2008, FI holdings in Indian stocks was quite high. So, when US markets like S&P 500 and Nasdaq fell, they fell 56%, we fell 61%. So we had no problem. The global liquidity, global financial crisis happened in US, yet Indian markets fell a lot more. A similar thing happened when COVID happened in 2020. US markets fell, Indian markets fell, but differentiate the two. You see, COVID was a global event. It had nothing to do with US. It started in China, percolated to the rest of the world. Global financial crisis essentially was a US specific event. However, what's happened over the years is, India has started moving somewhat differently to US markets. US is still 50% of the market capitalization. If you take the whole world's stocks market capitalization, US is still the mother market. So, it will have an impact if investors turn risk averse. But to my mind, unless there is an event which is, global in nature, Indian markets are not likely to follow US markets as much as they did in past. So, if I was to explain it simply, if there was a problem of inflation within the United States, to the extent that they can still print money and export inflation to the world, yes, you'll see some ripple effect of that happening in India. But to assume that a 5% fall in Nasdaq will lead to a 5% fall in Indian markets is not correct. On the contrary, I believe that if there is a correction in US markets, not a crash, 5, 7, 10% correction on account of, let's say, overvaluation in US stocks or in tech stocks in particular, a lot more of that money is likely to flow into emerging economies like India if they were cheaper, like our IT sector is right now. So in the absence of a global event, it's unlikely that a US market fall will have an effect on Indian stocks in a negative way. It may actually have a positive effect. So mostly sentiment and FII outlook on global markets will have a major bearing on Indian markets when it comes to factors outside of India. Also, in a minor way, Indian markets, unlike in past, are now a lot more domestic in nature. They are based on domestic liquidity, domestic fund inflows, domestic consumption. So, Indian mutual funds are investing a lot more. So they have decoupled a little from the West. So, short point, unlike the past where American problems will become world's problems, US markets fall, so Indian markets and markets around the world will fall. This may not happen this time, unless the reason why US markets fall is sort of, a reason which applies to all markets in general. Just because of slowdown in US, as you've seen a slowdown in Japan or China or even Europe in past, did not have much impact on Indian markets. I doubt if this will have as much impact on Indian markets going forward. On the contrary, my personal view is a 5-7% correction in US markets on account of overvaluation will lead to a lot more money coming into India. Also because the currency appreciation that we've seen for dollar vis-a-vis rupee, So dollar is right now at a price where, if I start putting money into India and dollar was to start depreciating and rupee starts appreciating, it would be a great time for them to come in, which is, I believe, likely to happen if corporate earnings in India start improving from this point onwards. So keep that in mind.